Thanks a lot. So we covered all those earnings, and again, the theme kind of continues on the top versus bottom line, especially with the likes of DuPont. Alex, thank you very much. Ron, appreciate it as well. And now let's get on to some of the other tops.
So we're waiting some second quarter earnings as well from Lockheed Martin, also sharing Plow. We have a whole bunch of names reporting today. Ron Davari is of NewOak Capital, CEO over there. Alex Hamilton of Jessup Lamont joins us once again. So maybe just before we get these numbers, Alex, starting with you, what do you think is the big takeaway so far for, as I look at, I'm expecting Alex over there. You're switching sides on me now. Alex, what do you think is the big takeaway so far from earnings season? Have analysts set the bar too low for some of these earnings estimates, or are we right about where we should be?
You know, I think Ron said earlier this morning, you know, economies always overshoot to both sides. I think probably the bar was set a little too low. I think people just didn't know what was going on. So it's a little unfair to say too low. I really didn't know. I mean, I haven't bought the second half recovery. I still don't.
When do you expect that?
I think it's sliding into 10. I mean, the reality is everything that we're seeing. There's no job creation. I can do some financial maneuvering. I mean, revenues are light. Yep. Period. End of story. You can't. It's pretty hard to manufacture that one.
The market's not, Ron, not necessarily punishing a lot of these companies for the light revenues. I mean, we've been up. We were up huge, 7% last week, up again yesterday, up in Europe this morning. So what's that disconnect all about, do you think?
I think the disconnect is really, what are the equities? They're essentially an option on asset values to going up and revenues going up over long term. And we are seeing less uncertainty, if you will, than we have. It's all about, you know, it's a little bit more clarity in terms of this is not going to be a bottomless hole. Yeah. There is some bottom, and as Alex pointed out, you know, if you can expect a really bottoming around, you know, first half of 2010, you're supposed to go in. You're supposed to go in now.
You know what we could do here is Lockheed, the big defense contractor, and Alex, you'd be great to talk about this, could report. Last quarter it actually reported at 6:30 Eastern, so it could report any minute. So just in case it reports, let's set that up now and talk about this company a little bit. There's a complete change of strategy going on in the defense industry, as you know and have researched, with what's going on in this Pentagon, with this administration, and Lockheed, of course, is directly affected by that. Pull back on the F-22 fighter jet, which they make, push forward in some other areas. How is Lockheed positioned to combat this changing dynamic, do you think?
Well, this change hasn't happened overnight. You know, I'm a big fan of when we look at stocks, let's look at the trends. Where's the money going to go? I mean, it's been clear that we've had record years of defense spending. Obviously, what's changing under the new administration is they're looking at where this money is going closer. These are long-term cycles. Defense cycles are usually 10 years up and 10 years down. Lockheed was very well positioned to what the spending was a few years ago. They make aircraft. I've been arguing where we need to be positioned going forward are for the new threats. Cybersecurity is something that you guys talk about in the headlines day in and day out. And I think that's going to be a new evolving, let's call it a sub-economy coming out of there. So going forward, I mean, obviously there's a lot of questions at Lockheed Martin on the F-22. The F-22 was something that Defense Secretary Gates wanted to cut due to a lot of lobbying. It looks like Saxby Chambliss in Georgia, the senator, has put, I think, $1.25 billion back in the budget to try to purchase more F-22s, and I think that bill's actually going up for vote today or in the next few days. So we're going to see, and for me, that would be a huge question for Lockheed going forward. That's been a huge revenue generator for them, and that would actually really answer that question. How are they positioned going forward?
What happens with that bill?
That's right.
All right, here's the deal. So with Lockheed, when it comes out, we'll pass it along, sharing Plow maybe this hour as well. But Alex and Ron, thank you for now. We'll come back as the earnings break. And so far, the big one this morning has been DuPont beating on the bottom line and a little light on the top line.
All right, joining us to talk a little bit about this, Ron Davari, CEO of NewOak Capital, Alex Hamilton, Jessup Lamont, Director of Research. Ron, we talked a lot about cost cutting. The CEO of DuPont right away at the top of their press release mentioning the effectiveness of cost cutting efforts. Will Wall Street start to reward, instead of some of the blockbuster earnings that we've seen over the past several years, those that are best at cost cutting?
I think cost cutting is important, but I think they have to keep up innovation. DuPont is all about innovation, and they've got to keep spending money on that. So you have to really, you know, if you're buying a stock, you're really looking at future earnings, not just, as Alex pointed out, you've got to look over the quarter and look over forward.
Well, and you bring up the point of sustainability. You know, we've been on these cost-cutting quarters the last 2 quarters for sure. You know, how long will Wall Street investors take it and say, okay, great for those cost-cutting efforts and hitting your EPS, but hey, that doesn't fly third, fourth quarter. How long do you think we can keep this up?
Well, that really would ultimately put pressure on the economy as essentially cut headcounts, and that ultimately, that's why we sort of a dilemma here. The unemployment keeps rising, and we expect the consumer to bail us somehow. The story doesn't quite jive, does it?
Right.
So at some point that has to end. I think they're using this cycle as a way to clean out and really put the human resources where it counts, and that's on the innovative side, generating future optionality for the company in terms of positioning themselves across all the sectors they're in. And that's really what we look at ultimately.
Thank you, Ron, and good to see you.